All right, so get this. 90% of day traders fail in their first year.
Yeah. It's a pretty daunting statistic, right?
It is, and a lot of people are interested in day trading, but I think that number scares a lot of people off.
I can understand why, for sure.
It's a big risk, you could lose a lot of money.
Absolutely. And I think that's why today's deep dive is so important. We're going to be talking all about how to avoid becoming part of that 90%.
Yeah, we're going to try to crack the code of day trading success.
Exactly. And to help us do that, we're diving into a podcast episode from Trading Mindset Mastery called Why 90% of Day Traders Fail in Their First Year.
So they obviously know something about this topic.
Well, they better if they're making a podcast about it, right?
Right. So let's jump right into it. The podcast starts off by really hitting us with that 90% failure rate.
Yeah, they don't sugarcoat it at all.
Not at all. And, it's not meant to discourage people.
Right? It's more like a wake-up call.
Exactly. Like, hey, if you're serious about this, you got to be prepared.
You got to go in with the right mindset and a solid plan.
So why is day trading so hard? Why do so many people fail?
Well, the podcast outlines a few key reasons. One of the big ones is this idea of emotional trading.
Yeah, letting
Right.
your emotions get the best of you.
Exactly.
Yeah.
You get caught up in the excitement, the fear, the greed, and you start making impulsive decisions.
And that's usually when things go south,
Pretty much, yeah. You got to be able to keep a cool head and stick to your strategy.
which is easier said than done, I'm sure.
Definitely takes practice. And that's where the podcast brings up another big reason for failure:
What's that?
lack of preparation. A
Oh,
lot of people jump into day trading without really understanding the markets or how to manage risk.
I think it's just going to be easy money.
Right, like they're going to get rich quick. But the reality is it takes a lot of knowledge and skill to be successful.
It's like trying to perform surgery without going to med school.
Exactly. You need to have the right tools and training.
And speaking of tools, the podcast really emphasizes the importance of using trading simulators.
Specifically, simulator.com. They mentioned it like a million times.
Yeah, I was kind of surprised by how much they talked about it.
Well, I think they have a good reason. Simulators allow you to practice trading in a risk-free environment.
So you can make mistakes without losing your shirt.
Exactly. You can test out different strategies, see what works for you. You get a feel for the market without putting any real money on the line.
So it's like a training ground for day traders.
Exactly. And they argue that simulator.com is especially good because it's free, easy to use, and has all these advanced features.
So you're not just playing a game, you're actually getting a realistic trading experience.
Right. And I think that's key because you want to be as prepared as possible when you start trading with real money.
Makes sense. So let's dive into those 5 main reasons for failure that the podcast outlines. The first one we've already touched on a bit, lack of knowledge.
Right. Not understanding how the markets actually work or how to analyze stocks and trends.
It's like trying to speak a language you've never learned.
Exactly. You're just going to be fumbling around making a lot of mistakes.
And the podcast gives a really good example. They say, imagine trying to day trade Tesla stock without understanding anything about the electric vehicle market or the company itself.
You'd be going in completely blind.
Just throwing darts at a board and hoping for the best.
And that's not a recipe for success. And that's where simulator.com comes in. It allows you to practice reading charts, understanding trends, and identifying those crucial entry and exit points.
So you can start to develop that market knowledge before you risk any real money.
Right. And they also emphasize the importance of learning about risk management, which is the second big reason for failure.
Yeah, that's a big one. A lot of new traders get wiped out because they risk too much too soon.
They get caught up in that get-rich-quick mentality, and they end up losing everything.
The podcast compares it to gambling your entire savings on a single spin of the roulette wheel.
You might get lucky once, but in the long run, it's a losing strategy.
So how do you avoid that trap? How do you manage risk effectively?
The podcast recommends using the simulator to experiment with different position sizes, stop-loss orders, and risk-reward ratios.
Okay, whoa. Hold on a second. You're losing me a little bit there. Can you break that down for me? What are stop-loss orders and risk-reward ratios?
Sure. A stop-loss order is basically an automatic instruction to sell a stock if it drops to a certain price. So it limits your potential losses on a trade.
Okay, that makes sense, like a safety net.
Exactly.
Yeah.
And a risk-reward ratio is a way to assess the potential profit of a trade relative to the potential risk.
So like if you could potentially make $2 for every $1 you risked, that would be a 2-to-1 risk-reward ratio.
Right. And the podcast stresses that you need to find a ratio that you're comfortable with based on your own risk tolerance.
So it's not one size fits all.
No, definitely not. You need to figure out what works best for you and your trading style. And the simulator can help you do that.
So you can kind of test the waters before you jump in the deep end.
Exactly. And that brings us to the third reason for failure, which is overtrading.
Overtrading. What's that?
Basically, it's when you're making too many trades, often out of FOMO or impulsivity.
Fear of missing out.
Right.
Yeah.
You see a stock going up and you think, oh, I got to get in on that, even if you don't have a solid reason for buying it.
And then you end up buying at the peak and losing money.
It happens all the time.
Yeah.
And the podcast says that overtrading can lead to fatigue, emotional burnout, and ultimately poor decision-making.
It's like you're trying to hit every single pitch, even the ones that are way outside the strike zone.
Exactly. And you're going to strike out a lot more than you hit a home run. And that's where the simulator can be really helpful. It can help you identify those patterns in your behavior.
Like, am I overtrading? Am I chasing every little price movement?
Exactly.
Yeah.
And once you identify those patterns, you can start to develop strategies to counteract them.
So it's like having a coach who can help you see your blind spots.
Exactly. And the podcast also talks about the importance of managing your emotions, which is the fourth reason for failure.
Ah, yeah. I can see how that would be a big one. Day trading can be pretty intense.
It's a roller coaster of ups and downs. And if you let your emotions get the best of you, it can really sabotage your trading.
Like if you start panicking when a trade goes against you and you sell too early.
Or if you get too greedy and hold on to a winning trade for too long, hoping it'll keep going up.
And then it crashes and you lose all your profits.
Exactly. You got to be able to keep a level head and make decisions based on logic, not emotion.
Which, again, easier said than done.
For sure. And that's why the podcast recommends practicing techniques for managing your emotions, like taking breaks when you feel overwhelmed, setting stop-loss orders to limit your losses, and avoiding revenge trading after a bad trade.
So basically, you're training yourself to react rationally rather than emotionally?
Exactly. And the simulator can be a great tool for that because it allows you to practice those emotional control techniques in a safe environment.
So you're not risking any real money while you're learning to master your own mind.
Right. And finally, the fifth reason for failure is failing to review and learn from your trades.
Yeah, you got to be able to analyze your mistakes and figure out what went wrong.
Otherwise, you're just going to keep making the same mistakes over and over again.
The podcast uses the analogy of a basketball player who never watches game film.
It might be practicing, but they're not actually learning from their mistakes or identifying areas for improvement.
So it's not just about putting in the hours, it's about deliberate practice focused on identifying patterns and making adjustments.
Exactly. And Simulator.com has features that can help you do that. It allows you to track your trades, analyze your entry and exit points, and see the big picture of your trading performance.
So it's like having a coach who can give you feedback and point out those areas where you need to work.
Right. And the podcast emphasizes that this review process should be an ongoing part of your trading routine, not just something you do after a losing streak.
It's about constantly refining your strategy and adapting to the ever-changing market.
Exactly. So those are the 5 major reasons why day traders fail: lack of knowledge, poor risk management, over-trading emotional decision-making, and failing to review and learn from your trades.
Okay, so now that we know what the pitfalls are, let's move on to how to avoid them and how to set ourselves up for success.
Sounds good to me.
So stay tuned. We'll be right back after a quick break.
See you in a minute.
Okay, so we've covered those 5 big reasons day traders wipe out. What can we do about it?
Well, the podcast we're looking at really pushes simulators,
Yeah.
especially Simulator.com.
Yeah, they were definitely fans. Makes sense though, right? Practice without risking real cash.
Exactly.
Mhm.
Like a flight simulator for trading. You wouldn't just hop in the 747 with zero training.
True, true. But are there downsides to simulators? Could you get too comfy and develop bad habits?
That's a good question. They admit simulators aren't perfect. They can't replicate the crazy emotions of live trading. You know, that heart-pumping feeling when you're about to make a big move.
Yeah, the adrenaline rush. But for learning the basics, simulators seem invaluable.
Totally. Use them to practice reading charts, spotting trends, testing different approaches.
It's like learning a language. You got to immerse yourself before you can hold a conversation.
Perfect analogy. Simulators can be that immersion for traders, but consistency is key. The podcast recommends setting aside time every day for practice.
Makes sense. Treat it like any other skill you're trying to master. Okay, but simulators are just one tool. What else does the podcast suggest?
Having a solid trading plan. This means setting realistic goals, knowing your risk tolerance, and having clear entry and exit strategies for different market conditions.
So don't just wing it. Have a roadmap.
Like a pilot's flight plan. They consider weather fuel obstacles. Day traders need that same level of planning.
This all ties into discipline, right? Which I imagine is huge E in trading.
You got it. Sticking to your plan, even when emotions run high, is key. The podcast recommends techniques for managing those emotions. Take breaks when you're overwhelmed. Set those stop-loss orders to cap your losses. And avoid revenge trading.
Revenge trading, what's that?
It's that knee-jerk reaction to chase losses after a bad trade. Like, I'll win it back right now, usually leads to even bigger losses.
Sounds like a recipe for disaster.
It is. The podcast describes it as a spiral. You got to stay calm, stick to the plan, don't let emotions rule.
So the mental game is just as important as the technical stuff.
Absolutely. The podcast suggests mindfulness techniques, like meditation or breathing exercises, to stay focused during those tense trading moments.
Wow, it's fascinating how much psychology is involved.
They say it's just as crucial as understanding charts and numbers. They even suggest reading books on trading psychology.
So it's all about self-awareness and controlling your reactions.
That's a big part of it. And again, simulator.com can help. You can practice staying calm, sticking to your plan, not overreacting to wins or losses.
It's like a safe space to train your mind for the real deal.
Exactly. This deep dive is making me realize day trading isn't just about getting rich quick. It's a skill that takes time and dedication.
It's about self-mastery as much as market mastery.
Well said. And the podcast stresses that it's a journey, not a destination. You're always learning, adapting, facing new challenges.
No magic formula, just continuous improvement.
Exactly. They encourage listeners to stay curious, to experiment, to never stop learning. The market's always changing, so you got to stay ahead of the curve.
It's like being a student forever, always soaking up new knowledge.
That's what makes it exciting. It's a constant puzzle, a challenge to conquer. And the podcast argues the rewards can be huge, financially and personally.
Freedom, independence, intellectual stimulation. They definitely paint a compelling picture.
They do, but they also keep it real. It's not easy. It takes work.
So to recap, we need simulators, a solid plan, emotional control, and a commitment to learning. What else did the podcast suggest?
Some practical tips, like setting specific trading hours, having a dedicated workspace, minimizing distractions, and staying up to date on market news.
So treat it like a job, not a hobby.
Right. Be professional about it. But they also say start small, master one thing at a time. Begin with paper trading or using a simulator to get your feet wet.
Baby steps before the marathon.
Exactly. No need to rush. Build a solid foundation first. That's how you beat that 90% failure rate.
By being prepared, disciplined, and always learning.
That's the winning formula.
This deep dive has been eye-opening. It's not just about making money. It's about pushing yourself and achieving something truly challenging.
And it can be incredibly rewarding, both personally and financially.
Okay, so before we wrap up, any other key takeaways for our listener?
The podcast ends with a powerful message that 90% failure rate isn't a prediction. It's a challenge, a call to action to take day trading seriously.
So it's not about luck. It's about taking control and putting in the work.
Exactly. And they urge listeners to never give up, to embrace the challenges, to keep striving for excellence.
That's inspiring stuff. It's kind of crazy how that 90% failure rate now feels more like motivation.
Right, like a gauntlet thrown down.
Exactly. So for a listener who's now fired up to try this, what's the most important first step? Besides simulator.com, of course.
I'd say define what success means to them personally. Is it making consistent profits? Is it mastering one specific strategy? Or maybe it's that freedom day trading can offer. Having that vision will guide everything else.
It's like setting your destination before you even pack your bags.
Totally. And it ties into what the podcast said about realistic goals. Don't aim to be a millionaire by next week. Focus on the foundation, the learning, the gradual increase in risk as you gain experience.
Like learning piano. You don't start with Chopin. You got to do scales first.
Love that analogy. And remember, it's a marathon, not a sprint. The podcast was big on that. There will be losses. It's how you learn and adapt that matters in the long run.
So that resilience we talked about is key.
For sure. And don't forget, there's a whole community out there, forums, mentors, people who can help. Don't be afraid to connect with other traders.
Like having a support group on your journey.
Exactly. The podcast also reminded us about staying curious. Always be learning. The market changes constantly, so you got to keep up.
It's a lifetime of learning. New strategies, new challenges, always growing.
That's what makes it so rewarding. It's never boring.
Hmm.
I'm curious, though, beyond the technical stuff, what personal qualities do you think are essential for a day trader?
Good question. I think organization is huge. You got to be on top of so much information.
That's a good one. I'd add adaptability, too. The market throws curveballs. You got to adjust on the fly.
True, true. Okay, so we've learned a TON from this deep dive. Any final words of wisdom from the podcast for our listener?
They ended on a really powerful note. They said that 90% failure rate.
Yeah.
It's not a prediction, it's a challenge. a call to approach this with the respect it deserves.
So take it seriously, put in the work, and defy the odds.
Exactly. They want listeners to know this is achievable. But it takes effort, discipline, continuous learning.
This has been amazing. I feel like I understand day trading in a whole new way.
Me too. It's not just about the money. It's about pushing yourself, mastering something truly difficult.
And who knows, maybe one day we'll have our listener on here sharing their success story.
That would be awesome. But for now, we've given them the tools and knowledge to get started.
Remember, it's not about beating the odds. It's about defining your own path to success.
To our listener, I'll leave you with this. Don't just trade the market. Trade your potential.
Wow, I love that. And with that, we'll wrap up this episode of The Deep Dive. Thanks for joining us.
See you next time.